I bet you didn't know that Bitcoin's price could skyrocket soon? Yes, you heard that right. The cryptocurrency that has been making waves in the financial world might just be on the verge of another explosive growth phase. But what exactly is driving this speculation? And more importantly, what should you, as an investor or an enthusiast, be looking out for? Let's dive deep into the world of Bitcoin and uncover the factors that could potentially lead to the next big bull run. Hang tight and let's break it down. Bitcoin, often referred to as digital gold, has a history of dramatic price movements. These movements are influenced by a myriad of factors, ranging from technological advancements to macroeconomic trends. Understanding these factors can give us a clearer picture of what to expect in the near future. Bitcoin's been the talk of the town, and for good reason. Its decentralized nature, combined with its potential for high returns, has made it a favorite among both retail and institutional investors. But beyond the hype, there are concrete reasons why Bitcoin might be gearing up for another significant price surge. Remember the 2017 bull run or the 2020 surge? These were not just random events. They were driven by specific catalysts that created a perfect storm for Bitcoin's price to soar. In 2017, it was the increasing mainstream awareness and adoption of cryptocurrencies. By 2020, the narrative had shifted to institutional adoption and the economic uncertainties brought about by the global pandemic. We might be on the brink of another one. The signs are all there. From increasing institutional interest to favorable regulatory developments, the stage is being set for another potential bull run. But what exactly are these signs and how can we interpret them? But what's fueling this speculation? Let's break it down into three main factors: the halving event, institutional interest, and regulatory clarity. Each of these factors plays a crucial role in shaping the future of Bitcoin's price. First off, we've got the halving event. This is a significant event in the Bitcoin ecosystem that occurs roughly every 4 years. During a halving, the reward for mining new Bitcoin blocks is cut in half. This means that the rate at which new Bitcoins are introduced into the market is reduced, effectively decreasing the supply. This happens roughly every 4 years, cutting the reward for mining Bitcoin in half. Less supply, more demand. It's basic economics. When the supply of an asset decreases while demand remains constant or increases, the price tends to go up. This is exactly what we've seen in the past with Bitcoin's previous halving events. Basic economics, folks. The halving event creates a supply shock, which historically has led to significant price increases. But the halving is just one piece of the puzzle. Then there's institutional interest. Over the past few years, we've seen a growing number of institutional investors entering the Bitcoin market. These are not just small-time players. We're talking about major corporations and financial institutions. Big players like Tesla and MicroStrategy are buying up Bitcoin like it's going out of style. Their involvement not only brings in significant capital, but also adds a layer of legitimacy to Bitcoin as an asset class. When companies with billions of dollars in assets start investing in Bitcoin, it sends a strong signal to the market. When the big fish jump in, you know the pond's about to get crowded. Institutional interest can drive demand to new heights, pushing the prices up. But it's not just about the money, it's also about the confidence and stability that these institutions bring to the market. Let's not forget about regulatory clarity. One of the biggest hurdles for Bitcoin and other cryptocurrencies has been the lack of clear regulations. This uncertainty has kept many potential investors on the sidelines, wary of the risks involved. Governments are slowly but surely laying down the rules of the crypto game. And guess what? More clarity means more confidence for investors. When investors know the rules, they are more likely to participate in the market. This increased participation can lead to higher demand and, consequently, higher prices. More clarity means more confidence for investors. Regulatory clarity can also pave the way for new financial products such as Bitcoin ETFs, which can further drive demand. Now, for some fun stats, let's take a look at the historical performance of Bitcoin following its previous halving events. These statistics can give us some insights into what we might expect in the future. Historically, after each halving, Bitcoin's price has surged. The first halving, which occurred in 2012, saw Bitcoin's price increase by a staggering 9,000% over the following year. This was a period of rapid growth and adoption for Bitcoin. The first halving saw a 9,000% increase, a truly astronomical rise that caught the attention of the world. This was a time when Bitcoin was still relatively unknown, and the halving event played a crucial role in bringing it into the mainstream. And the second, a modest 2,900%. While not as dramatic as the first, the second halving in 2016 still led to a significant price increase. This time, the market was more mature, and the growth was driven by a combination of increased adoption and institutional interest. So, where do we go from here? The upcoming halving event, combined with the growing institutional interest and increasing regulatory clarity, sets the stage for another potential bull run. However, it's important to remember that the cryptocurrency market is highly volatile and unpredictable. Of course, crypto is as volatile as a cat on catnip. Prices can swing wildly in minutes. This volatility is both a risk and an opportunity. For those who can navigate the ups and downs, the rewards can be substantial. But for those who are unprepared, the risks can be equally significant. Prices can swing wildly in minutes. This is why it's crucial to stay informed and be prepared for the unexpected. The key to success in the cryptocurrency market is to stay ahead of the curve and make informed decisions. So what's the play here? Do your research, stay informed, and never invest more than you can afford to lose. This is sound advice for any investment, but it's especially important in the highly volatile world of cryptocurrencies. And never invest more than you can afford to lose. Remember, the goal is to build wealth over time, not to get rich quick. Patience and discipline are key. Remember, it's a marathon, not a sprint. The cryptocurrency market is still in its early stages, and there will be many ups and downs along the way. But for those who are willing to stay the course, the potential rewards can be significant. So, are you ready for the next Bitcoin bull run? Buckle up, because it's going to be one heck of a ride. The future of Bitcoin is full of possibilities, and the next bull run could be just around the corner, because it's going to be one heck of a ride. Whether you're a seasoned investor or a newcomer to the world of cryptocurrencies, the next few months could be an exciting time. Stay savvy, stay informed, and get ready for the ride of your life. Catch you in the next one. Stay savvy, crypto enthusiasts. Until next time, keep your eyes on the market and your mind on the future. The world of Bitcoin is ever evolving, and the next big opportunity could be just around the corner.